Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So today is the 13th. Welcome all. Q&A window is open for questions. One thing I want to point out, and we had these numbers hit earlier today, but as you can see, if you ever click on the red folder event here, forexfactory.com, you can see the events going on. I don't really talk too much about this stuff, but the bottom line, at least in terms of the US, inflation is coming in higher than expectations. And obviously May was a much more of a surprise. I think this is a bit of a lagging number, as we saw, talking a lot about how commodities have just been raging from a cost standpoint. Been pretty pervasive across most of the commodity space, and we saw that play out essentially in inflation. So now the number is essentially 0.2 of a percentage point higher than forecast. The previous was 0.8 that I just talked about. So keep an eye on this closer. And obviously this can certainly spill out and or dovetail into other markets. So pay attention closely on the Canadian as well as the Australian, certainly in all the European domiciles, consumer related forecasts and or the actual numbers for inflation. So we need to keep a closer eye on this, because 1 month, an anomaly, 2 months, something to think about. Now we're 3 months, we're beginning to build a pattern. So maybe they'll come out with forecasts higher, obviously, for the next release next month. So Governor Bailey speaking, they keep in mind this isn't necessarily synced. So pay attention to these times in relation to the time zone you're in, not this one here. But tomorrow we've got, again, a whole bunch of stuff coming out of the Canadian, not only the Federal Reserve bankers, or I say the central bankers, not the Federal Reserve in the US, but certainly the government as a whole. Be interested to see what's coming up in terms of inflation as well. Again, later tomorrow, we have Fed Chair Powell speaking. He's testifying. Again, you can click on these windows and take a look at what's going on. So what I'm hearing mostly on the street, I keep in touch with, I don't know, this is via a variety of direct messaging systems, including text, Telegram, all that different stuff. But talk to probably about 9 or different traders. Most of these guys are big fund traders in either New York or Connecticut that I speak with. One guy's in the UK. And the prevailing sentiment that we're hearing, and a lot of the folks that I follow on Twitter, is that, the marketplace, I should say, of institutional analysts, traders, investors, portfolio managers, although the whole group, really looking for some other governor to start the dissent and talk about inflation, right? 1 makes a singular individual, 2 makes a pair, right? 3's company. So it may be a bit preliminary, but that's something I kind of have my eye on. It's not necessarily that easy to see all that and make some sort of broad assumption on, well, hey, if all these central bankers and a couple of guys are dissenting from the group and talking more about inflation, yes, it's a problem. How does this play and spill over into currencies, right? So take a look at the dollar. Again, not really a lot going on. Summer months, lower volumes, normal stuff. Been talking about this for a couple of weeks. This is a prevailing theme in terms of just the markets as a whole. Although we have, in terms of the euro, we've got a pretty big support line we're now seeing. Let me just show a little bit of bigger screen on this. Maybe a little easier to see. We're sitting on support. So right at this I don't know, essentially about 60 pips ish lower than where we are. All right, 1750 ish area, big support. What does that mean for your EAs and or accepting trades? It just means that it's pretty strong support. Doesn't mean it can't crash through it lower as the dollar lifts, which is our counter trade from what we've been seeing from a, let's go to the daily chart here. It's on the weekly. The prevailing move down, and now what has turned out to be literally a 6 month, and this is maybe easier to see this way, a 6 month base with 93.40-ish area zone, the high, and the low and the edge of the cliff down here at 88.25. So this has been a big broad-based balance, if you will, over this whole area. It started essentially to get into this area right around basically a year ago. So we've been down in this for a year. And the reason I point this out is that we've put in a solid base. We've only got in this particular point, I should say, just this current base, which started right about here, 13th of November. It's a little more than 6 months in the lower portion of this. We certainly have put in a really solid base. Doesn't mean we're going to rally from it, but this looks like a good long base and a cup with handle pattern. So, I have been prognosticating lower on the dollar longer term, but that may not play out shorter term, especially if this inflation stuff keeps rearing its ugly head. It's going to force metals down maybe, and possibly the dollar up. So just be aware of that. But this looks like more of a sloppier cup with handle pattern. But we certainly have the argument of a solid base playing out in which to potentially rally. If that is in fact the case, Euro, GBP, most other dollar connected pairs are going to sell off. So just remember that. Take a look at the GBP while we're on the subject here. So clean it up a little bit, keep the screen a little cleaner. Real solid support right here, 3,700 area. 130 pips away from where we are here. Just keep that in mind. This is our big support, at least from a squeeze zone indicator standpoint. US CAD, again, not much going on. Looks like that cup and handle as well. Doesn't necessarily mean we're going to break higher, but we are in some areas of confluence. It certainly could be a zone. Take a look at Aussie, hanging on the edge of the cliff, in my opinion. Arguably, this spot 754-ish zone is support. It's also a neckline potentially from the head and shoulders on the daily. Both shoulders being kind of where there was resistance lines drawn, which is pretty easy to spot. We have not broken that. And I think a lot of that is just, lower volume summer hours. Keep in mind though, lower volumes in any asset trade globally doesn't necessarily mean it's going to do nothing or be flat. Volatility can come in and wreak havoc on low volume trading. So that's another thing that in sort of the old days, I think things have somewhat cooled out from some craziness we saw obviously at the height of the pandemic, and lots of volatility we've seen in previous years related to all kinds of different things. Brexit as an example has sort of lent itself to calmer, cooler heads prevailing and or not as much trading going on, albeit overall volumes for Forex are higher, are all-time highs right now in terms of year over year. A lot of that I think is just pandemic related, but just typically institutional traders and all the different individuals globally to run institutional portfolios. I mean, most of these people, especially the big ones, they're on vacation. and a lot of them are taking a whole damn summer off if they can afford to, and or have the juniors watch the desk. So there usually isn't a lot of craziness going on in that area, but who knows? Could be wrong. Just given a general seasonal discussion, typically the heat really starts to build about right now if you're in the desert in the US. But in terms of just the marketplaces, when everybody gets back to school in September and or from vacations, and in the case of moving into the beginning of the fourth quarter, you have many mutual funds globally have their actual, and it's not a fiscal year end, but it's a calendar year end from a prospectus at December 31st. That's why you often will see a lot of volatility related to some juxtapositioning that's going on and or window dressing into the beginning of the fourth quarter. So just understand that could be an additional catalyst for volatility. CAD CHF, I wanted to show this because we bounced off of big support, not by much. Probably have to go to a 4-hour to see sort of the fun here, but broke below it. And now we're back sort of hanging on the edge of the daily here. If you look at a weekly chart with this, you could see for purposes of support, we're kind of here weekly chart wise, right in this spot 734-ish area, this whole zone of about 20 pips approximately. What else do I want to say? Dollar yen daily first, still in the upper zone, bouncing between support and resistance here. Nothing too crazy going on. I did want to look at GBP CAD because this has been 1, 2, 3, 4, 5. Here, I'm gonna expand this out so I could show this to you guys. This is easier to see now. So I've talked very infrequently about big picture concepts. One of the most important ones is understanding what's called OTF players are doing, other time frame. This is a term that is often used in a lot of market profile books by James Dalton, Peter Stedelmeyer, guys that have been sort of invented this back in the 80s that I utilize a lot. But this is called one time frame. And I thought this was a good example of this. So we got higher highs and higher lows in a successive period. And oftentimes if it's 1, 2, 3, not necessarily the case as much in currency land, but note that it could continue to the next point, which is exactly what we did. So noticing couldn't get underneath, which is a fairly easy to see support area here at the 1.70 or essentially 70-ish 25 area, right? Went all the way back to. So a lot of times if it can't find sellers under a given area, assets will more than likely auction to a higher price. And that's what we're seeing here. So one, just accepting trades, you'd be interested more in accepting longs after maybe hopefully a little pullback in a shorter time frame other than a daily, to continue to move higher into the next sort of target, right? We've made 4 attempts to get to this area, have not closed even near it unless we close at it today. This will be the first time in a while that maybe this lower zone has had it, and we're looking to see more rallying for the cable. And the pound basically continue to move up beyond this point. That would be my sort of read into this, but always want to stay on the lookout for stuff like that. What else do I want to talk about today? Gold. This one now. Let's reset this. So we've had a pretty decent, let's just look at this year, forget about the rest of this. Although I think you always want to look back and see what's going on in previous, the whole zone, if you will, the whole zone when we've been trading, you want to see it. This, you can actually see this a little better from a market profile perspective if one actually puts on a profile on the whole move. Okay, so this is GLD. Very, very liquid, one of the largest ETFs in the world, that actually mimics spot gold from an exchange traded fund standpoint. Trades on the CBOE. But the cool thing is you can put a profile chart on, see the value area highs and lows, obviously see the volume aggregated on a bell curve from a vertical perspective on the left-hand side of the chart here. But look where the support point is from a volume execution center point. It's right here at approximately $1,620 an ounce, or 162 in the ETF. See that? So you want to make a note of that and know that's basically, if you're going to trade this from a swing perspective on a potential breakout here higher, which I'm going to talk about next, that's your stop. All right. So, and you can even take a look at just the data, although I'd want to see the whole thing, but notice the move started here, and this is maybe not the easiest to see, but notice the move started here. We're in this whole upper range through this entire period of time, which is more than a year, right? So that's why I want to see the volume on what's called a composite chart, which essentially is what I've built here. So I know where all the volume's been executed. So that tells me at least that this zone, not always, but this zone should be defended right around $1,600 an ounce by institutions if we get back down to that level. It was supported pretty strong there. And we had an island reversal on this right down here on the 31st of March that led to a big rally. So if you're able to spot this, maybe this isn't necessarily the best time to get in down here on the edge of the cliff, right? But you can get confirmation on what's called a wedge pop, which I'll talk more about as we get into deeper indicator discussion. But this was a confirmed wedge pop, and we tested it again right here on the 14th of April, and then it took off. So that's kind of when you want to be long swing wise as we increase some exposure for clients. I talked a lot about this in the past, but then we moved up into this point, and we've taken some exposure off. This was probably a surprise to many traders, but again, it held a level. Right where your stop would be. You can even take a look at a broader, so it encompasses all of the data, but you're getting a lot of this volume down here I don't really care about. I just want to see when we broke into this upper point, which was what, 6th of April, is that right? No. 9th of April. Oops. So if you just incorporate, it's kind of hard to do this. In a viewable range, it's kind of giving you where the stop, in my opinion, should be. You can always have your stop right at the value area low, which you'll note there's multiple areas of confluence on this, because I got a lot of questions on this. I know there are a lot of traders in Arrow that are trading gold and or they're trading some DAX 30 stuff. They're trading different things. This is kind of how I would be analyzing gold from a perspective. It doesn't really help much in short-term trades, but I think you want to start to look at longer-term stuff. You can use the exact same analysis to drill down into a 4-hour chart on it, just like you see here. I mean, it looks to me, especially if you jump over into just spot to analyze it. Actually, let me just show you. This is easier to see actually on the 4-hour. This looks to be a break right here. It looks to be the buy point at 1816. If it breaks from this, you could even wait for it to test this again. If it decides to break and run and pull back, 1816 holds, we're probably going to see a gap fill. It's probably a $50, maybe $60 run in this metal back to this area would be my argument. So just keep that in mind if you're trading this. What else did I want to note? Let's take a quick look at the coinage. I haven't paid too much attention to this. Dollar chart first. Remember, we only care about the data that's shown since it broke up into this area, which was damn near the first day of the year. Let's look at that. It's about as good as I'm probably going to get this. This is it. So right in this whole 31 500-ish area, and your stop is right under the lowest low. which I don't know that I'd have it that low. But probably my stop would be somewhere in the area of, you can even set the stop at an even 30, but we're probably going to get shaken out on that if it decides to hold this. We've now 1, 2, 3, 4, 5, arguably 5 times, not recently, that we've held this area. But notice though, when we've held this area, again, this is why I just continue to bring volume as long as it is quality volume, which certainly remains to be seen with this Bitstamp knuckleheads. But it's all we kind of have to go on at this point. So just for purposes of analysis, forget necessarily about how good the quality of the data is. Let's just say it's good. The declining volume in this would have me troubled. How volumes just really drop down. Again, summer hours, you get argued, hey, Steve, it's a summer hour. Yeah, no, I get it. You're probably right. But just be aware of that as well. So for the question I just got on PIP, what I probably would do is go into the AP Live in the back office, watch some videos. You know, a PIP's really just an acronym for percentage at point or price interest. It's just a measurement tool. So just keep in mind that to get the value of 1 pip in any currency, you essentially divide 1 pip in a decimal form, right? So 0.0001 by the currency exchange rate, and then multiply that by the notional amount of the trade. If you get lost in that, this is probably one of the better, I'll drop this in the chat window, better analyses I've seen, which I'm not sure if they address it quite in this form, in the trainings in the back office. But this is what I'll typically point students or clients to if they want a deep dive in terms of a PIP. But I always tell everybody, just look at it in an example, which they use a bunch here in this Investopedia, of 100,000 currency units, and the value of a PIP is always equal to 10 US dollars. It's probably a good way from a relationship standpoint to make that. So it's also important in that conversation to talk about basis points. So 100 bips, you'll often hear this term a lot, right? I'm on caps lock. 100 basis points is equal to 1%. So that's kind of funny. In the Federal House, I have my kids thinking in terms of bips because it just helps them break it down easier. When you're talking about expenses for funds and mutual funds and ETFs and trades and all that, it's just easier to speak in terms of bips, right? So somebody's like, hey, why are Vanguard's, expenses so cheap to run their mutual funds, right? This is a typical Vanguard fund has a 12 basis point cost, which is equal to essentially like 1/10, a little bit more, 1/12 of a percentage point, if that makes any sense. And it's like core 101 stuff, but sometimes I think that most people don't get the proper education on how to break down currency at its most basic form, and they get into all these other complex subjects. So take a look at that. So that is pretty much everything I wanted to say, right? What else? Just looking through the chat rooms, still think the considerable amount of questions could be had if somebody had actually just had a link to the AP back office and gone in there and seen all the recordings for their developers and or myself or Auvoria Corporate. Do note that we have a big event in Orlando at the end of the month. So I'm going to be flying in for those that have pinged me up looking to do stuff. I'm going to be flying in the morning of the 28th, and I have all kinds of just personal business functions I got to do in our new office. So I'm not available Wednesday. 29th, we've got to be in the ballroom doing a whole bunch of testing later in the day. So I do actually have some time, a little more in the day, Thursday morning. Not sure if I'm going to be up in my personal office or not. Friday, obviously, is the event all day, 10 a.m. it starts. We're going to be doing error room trading. Same thing with Saturday. And I'm actually flying back out on Tuesday morning, we're going to be at the beach, and then we're going to be at a bunch of the theme parks with the kids on these 2 days. So I can't just drag the family to Orlando and force them to look at houses and corporate events and not take them on any fun stuff. So we're going to do that instead. Yeah, and AP Academy, if you guys see that in the chat room, AP Academy has AP Basics, of course. It also explains PIPs. Although, in all honesty, I would listen to that because it breaks it down really well, and then just look sort of in an opposing view. The one I present is mostly from the perspective of U.S. dollar. So if you're living in Euro land, that may confuse you. I get it, but either way, you can get an education from an ulterior opinion. What else do I want to? So the question I just got on Ethereum here is a chart. Else do I want to address? Oil. Haven't really spent a lot of time looking at this. I prefer looking at the WTO ETF for this, but some people prefer the CFD's view on this. So for here, demand's back, guys. So I mean, globally, with a lot of restrictions on continued energy independence by the new administration in the U.S., which I vehemently disagree with. We want to maintain our energy engine, but it has pushed up the price of oil along with just general demand. You really got to look at a weekly chart, honestly, on this thing from the last 2 years to really see what's going on. Pandemic lows, it's actually you wouldn't. A lot of people are like, hey, did you get a chance to get filled down there? Yeah, I don't think they canceled most of these trades, which is a real snafu, quite frankly, by Chicago Board Options and or the CME on execution of this futures contract. But hell, if you could bought the damn thing at $5, you'd be up a ton, right? But arguably, we probably are going to fall back inside of this zone right in here. We've traded in this zone a lot. This is a profitable zone still for the oil producing countries, including the U.S., because a lot of the political pressure is really mounting between that and a couple of hacks on some of our distribution facilities in the U.S. It's really made it a top priority of all the idiots in politics around the country. So, let's see what else I want to say. Yes, you're welcome. Thank you. Appreciate that. I think that's pretty much it. So these recordings spread the word are in the back office typically in about a day after I talk about it. And my presentation, I try to do these at 10 a.m. on Tuesdays and Saturdays. I show Aussie CAD. Did I miss that question? Look at that on a daily. Tight range. This thing's been coiling since beginning of June. Are you even longer? Since 12th of May, we moved down into this lower range and just weakness in the Australian after a whole bunch of strength, right? Notice it was at the top of this whole commodities boon, if you will, that was damn near the top in this currency. It's an interesting dichotomy that took place up here. This is about the peak when lumber and all those ones just rallied out and started crashing. And this has been a very, very trendable downtrend until we broke the trend line. Let's take a look. Kind of sloppy. You get the idea. These don't have to be perfect in technical analysis just gives you an idea of seeing where the channel is that we're moving down. So we still haven't broke the channel. So I kind of stand corrected on that because it looked like we did. That's why sometimes you just got to bust out the old-fashioned tools and draw the channel. Keep that on the, you keep an eye on this because we see any significant rally above a whole bunch of areas of stuff and confluence. Moving averages turning down. Notice after the cross took place, see that? Was a nice confirm. This is a great example of a golden cross taking place, and then boom, just continued down. So this little rally was a fantastic swing-based sell point towards the end of April. Yeah, cool. All right, guys. Crypto. Yeah, I already talked about that, Sean. Not sure if you caught that part, but here is the coinage long term. All kinds of stuff lining up down here, not just this red line. It's a bunch of other stuff, value area lows. We've made 5 touches below it. Looks like we're going to, all it's going to take at this point is a catalyst. That catalyst could be Elon Musk opening his big mouth and talking about a bunch of shit related to Dogecoin going up, or, you know, we're not taking Bitcoin this, Tesla or that. And it could be just some other type of catalyst. Typically seems to be the most powerful catalysts are the ones that have been the biggest pumpers. This is a big reason why I try not to pay attention. A lot of shills out there in crypto land. I know it's hard, but there is the area from a risk standpoint is just fraught with pump and dump people on both sides, right? So I try not to pay attention to any of that. I just try to be a purist and look at the charts. Ethereum, almost the same case. Do keep in mind another problem with this from just a geopolitical stance, if you will. As you may not know, the Chinese government has been cracking down tremendously on mining of crypto, but also companies that have been U.S. based, traded in the U.S. and or they're basically taking some swaps at capitalism. It started when they started going after Jack Ma, if you don't know who he is, founder of Alibaba. No, interestingly enough, the guy is almost like he's been in hiding, which is probably, quite frankly, a smart move to be. If I ran Alibaba, I'd probably honestly be in jail because they would have caught me saying some crazy stuff about the CCP, and they would have hated it, and I'd been thrown in the slammer. But the crackdown has been a negative. It's been good for the secondary video card market because I picked up a couple of cards for my new trading system, much cheaper than getting my brains blown out on new NVIDIA cards. So that's been a positive from a standpoint of a secondary market standpoint. The market's getting flooded with lots of cards from all these mining systems. But that is my take on crypto. So everybody have a great week. We'll see you Saturday. Always feel free to ask any questions, and everybody have a great trading week.